the reason that thinking out 100 years makes sense is because when you think out 3 generations, it's very clarifying and it allows you to avoid all the noise and all the confusion and all the sound and fury. And everybody wants to like wave smoke and mirrors in front of you and get you to juggle razor blades and shock and awe you. Everybody's going to always try to get you to panic. They're always going to basically fudge you. They're going to say, oh, this is not safe. That is not safe. And their goal is to get your Bitcoin from you, right? What I'm saying is, you own the most desirable thing in the universe and you lock it away and you wait for 100 years and your family is rich.
MicroStrategy's executive chairman, Michael Saylor, has undergone a remarkable transformation from a prominent Bitcoin critic to one of its most significant investors over the past decade. In addition to overseeing a multi-billion-dollar software firm, Saylor dedicates a considerable amount of time to educating diverse audiences, particularly retail and everyday investors, about the potential of Bitcoin. Saylor's key message centers around the alarming reality of currency devaluation in systems reliant on fragile fiat currencies. He emphasizes that the United States dollar, as the world's reserve currency, experiences an annual debasement rate of 7%, posing a threat to Americans' wealth. Saylor argues that traditional asset classes, such as bonds, gold, silver, and even equities like the S&P 500, failed to outpace this devaluation, making Bitcoin one of the few assets consistently outperforming the Federal Reserve's balance sheet. In a recent interview with MMCrypto, Saylor underscores the limited choices individuals face: acquire and hold Bitcoin or witness a continuous loss of purchasing power and earnings. Despite skepticism and opposition, Saylor asserts that Bitcoin is the clear choice for savvy investors seeking an alternative amid economic uncertainties. He warns against detractors and highlights instances, such as multi-billion-dollar Treasury Department auctions and central banks divesting U.S. treasuries, contributing to a growing interest in Bitcoin. The interview clips featuring Saylor delve into the importance of not only buying Bitcoin but also adopting a hold for dear life strategy amidst the chaos and mainstream negativity surrounding the cryptocurrency.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
100 years ago, an acre of property in Miami Beach was about $10,000, and now it'll be about 20 million. So that's a factor of 2,000 increase in price. That's against a fixed yardstick. If you do the calculation, the US dollar is being inflated and supply 7% a year for 100 years. Weak current, that's the strong currency. That's the world reserve currency is increasing and supply 7%. So the asset inflation rate in dollars is 7% a year over 100 years. That's how you get from $10,000 an acre to $10 million an acre. Now, weak currencies in the developing world are inflating at 14% a year, unless they're really mismanaged and they're inflating at 21% a year. But I'll give you a simple fact. If you start with $1 million and you hold it in dollars in currency that's being inflated and supply at 7% a year, after 100 years, your $1 million is worth about $700. But what do you think it's worth if you're holding it in 14% debasing currencies? 28 cents. Okay, so clearly the weak currencies don't last 100 years because people are smart enough to realize that $1 million going to 28 cents is not a good investment. But the strong currency is taking you from $1 million to $700. And that's the rate in the last 100 years when the US is winning all the wars. We're winning all the wars. So the next 100 years, I don't think it, the question of what's the future of all these currencies in these countries, the euro versus the yuan versus the dollar, I don't think it's really that relevant. I think what's relevant is you just have two choices, or we have three. You either hold your money in the strongest currency in the world, and you're losing 7% a year. You're being cut in half every decade. You're being cut in half 10 times in 100 years, and you're going from $1 million to $700. Or you put your money in the weak currency and you're being cut in half every 3 or 4 years, and you're going from $1 million to 28 cents. Or you put your money into a diversified portfolio of conventional assets, conventional real estate, if you invest in REITs, securitized real estate, or you invest in S&P companies, big companies, you're probably going to grow at 7 or 8% nominally. The money is going to lose 7 or 8% of its value in real terms. And in 100 years, The $1 million of purchasing power you have today will be $1 million in 100 years. You won't have gone bankrupt. You just won't have made anything. So if you want to actually beat that 7% hurdle rate, then you need to strip away the risk and the liability from the asset class. So the risk is your property is seized. The risk is an earthquake hits it. The risk is a flood. The risk is rain. The risk is the executive running the bank steals the money. The risk is the person, the tenant in your building sets it on fire, or they don't pay their rent. The risk is the mayor rent controls your property. The risk is, such and such company, Nokia can't compete with Apple, and BlackBerry can't compete with Google, and such can't compete with AI, or you get unionized. I could give you 100 risks, but the bottom line is the reason that conventional assets like real estate and like stocks, the reason they can't beat Bitcoin is they can't get away from the risk and the liability of having human beings operating a physical property in the real world, because lightning strikes in the real world and governments act in the real world. So Bitcoin is, in my opinion, over 100 years, theoretically, in the long run, it's like a 14% versus a 7% monetary inflation rate.
Currently, Bitcoin is experiencing an average annual growth rate of 50 to 60%, a slight decrease from higher figures in previous years, indicating a cooling trend. However, according to Michael Saylor, the executive chairman of MicroStrategy, he estimates that Bitcoin will continue to outperform the Federal Reserve's balance sheet, providing a means to maintain and grow wealth in the decades to come. In the interview, Saylor emphasizes the significance of not just purchasing Bitcoin but holding onto it for an extended period. Saylor outlines the timeline of at least 100 years for holding Bitcoin, drawing a parallel between buying Bitcoin today and acquiring real estate in New York centuries ago. He suggests that, akin to members of royal families who retain exclusive rights to prime real estate for generations, Bitcoin holders should adopt a similar mindset. Saylor contends that holding on to Bitcoin is far more crucial than merely possessing it, emphasizing a long-term perspective for investors.
But the difference between 14% and 7% is the difference between your $1 million becoming $1 billion. At 14%, your $1 million becomes $1 billion of purchasing power, right? And at 7%, your $1 million stays $1 million, right?
Exactly.
Do you want to double 10 times in a row? That's 14 versus 7. Or do you want to basically break even 10 times in a row every decade? So ultimately, you can get excited in the near term about hyper growth Bitcoin, the 40, 50% Bitcoin, that's hyper growth. And I can give you a dozen reasons why it'll continue to grow more than 14%, over the next decade or so. But the reason that thinking out 100 years makes sense is because when you think out 3 generations, it's very clarifying, and it allows you to avoid all the noise and all the confusion and all the sound and fury. And everybody wants to wave smoke and mirrors in front of you and get you to juggle razor blades and shock and awe you in order to get you to give them your money. It's like, for example, if you were the royal family of the UK and I said, oh, there's a pandemic in London, but there's no pandemic in the middle of this island in the Atlantic, so I will trade you 1,000 acres in the mid-Atlantic for the center of London and Buckingham Palace, and Chelsea. Would you trade in a panic? Because if you did, when the pandemic ends, you would realize that you own something worth nothing, and you gave up the middle of London that was worth $100 billion. And so that's why everybody's going to always try to get you to panic. They're always going to basically fudge you. They're going to say, oh, this is not safe. That is not safe. And their goal is to get your Bitcoin from you. They may not even realize they're trying to get their Bitcoin from you, but they want to be relevant, right? What I'm saying is you own the most desirable thing in the universe and you lock it away and you wait for 100 years and your family is rich. And if that's the case, then why would you ever watch their television show? Why would you ever give them your money? Why would you ever pay them a commission? Why would you give them a 2% management fee and a 20% participation? Why would you buy their altcoin? Why would you buy their stock? Why would you hire them to give you advice? Why would you read their writing? Why would you listen to their video? It's like, you don't really need to do any of that if you just buy Bitcoin and hold it. And so that's why the rational thing to do is think like the Emperor of Japan. I mean, haven't they like owned the middle of Tokyo for 1,000 years or something? Or think like the King of England. Don't they own the middle of London for the last 1,000 years? And if you go look at the royal family in the UAE, it's illegal to buy beachfront real estate in the Emirates unless you're a royal. They won't just sell it to you. And it's because smart people realize that you should keep the high quality property for the next 100 years. You can't go buy the middle of Central Park, no matter how much you bid. I can't buy it for $1 billion an acre. The city of New York will not sell it to me because they're thinking out long term. And if you had sold Central Park at any point in the past 100 years for any amount of money within reason, for a 200% premium to the going rate of real estate, it would have been a mistake, right? It's always a mistake to sell the good thing and buy the average thing or the conventional thing.
Saylor's comparison between holding Bitcoin and possessing prime real estate prompts another intriguing analogy from the billionaire investor. Many individuals inquire whether it's too late to invest in Bitcoin in 2023, a common concern given its 15-year existence and the substantial profits early investors have garnered. Saylor addresses this by drawing a parallel to buying property in New York City a century or a few decades ago. In his analogy, Saylor notes that New York City had already established itself as the foremost city in North America by 1776, over a century after its founding in 1624. He likens the hesitation of those contemplating property investment in 1776 to current concerns about entering the Bitcoin market. However, just as people continue to invest in New York City over centuries, Saylor foresees a similar trajectory for Bitcoin. Individuals entered the market at different price points, and he predicts that, regardless of when one invests in Bitcoin, substantial returns will be realized, drawing parallels between the historical growth of both New York City and Bitcoin. Saylor invites comments and observations on his analogy and long-term predictions for Bitcoin in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.